This is Bill McCreed for Features Trading Secrets in a Trading Room video. I just wanted to give you a little overview. We've been switching to new tick charts because of the CME data feed has given us 2.5 times as many ticks. It's pretty excruciating. I've been trading on the 333 this morning, and it just got in. It's gone up, down, up and down, up and down, and not going very far. And you see the ergodic is bouncing around here. Well, I got in right over here at 86 and a quarter, and the market kind of bounced up to 87. It bounced back down. It looked like it was going to go down here because the ergodic was going down. We had a little bit of a divergence. So I got out right before it jumped up here and then jumped right back down. Now, one thing I've found, it's almost easier to trade on the 1335 tick. Let me up real quick. So here's a 1335 tick. The signals seem to work better here, to keep you in the trend longer. I was trading in this little area here, started down here, and then it just dribbled along to nothing. I got out when it retraced to about this level, then all of a sudden it took off, and then we had a huge down bar. So we're stuck in no man's land between the pivot point and the midpoint of the first resistance. This is after the Dow had hit 10,000, and then some of the market retraced a little bit. So it's a little bit in no man's land right now. And now with the moving out, or the ergodics down here near the midpoint, I'm just going to sit and watch it for a while. Now, two things that happened earlier was the consumer price index came out, shows that we're getting a little more inflation than we should. And then right at 10 o'clock, actually, this is 9:59. You can see people get a heads up on what's going on with the next report, which was the Philadelphia Fed survey, and it was measuring the health of the general economy, the general conditions, business conditions, and it was expected to be 12.5 to hit 11.5. Now, if you notice, the report didn't come out until 10 o'clock, yet people started trading it at 9:59. Well, he had this big drop, so fortunately I got out here. I took a quarter-point loss on my previous trade, but because I just got tired of waiting. One of my rules is if it doesn't go where you think it's going to go within 4 to 5 bars, and I waited about 10 bars, it was time to get out, and I got out right in here in these red bars. But anyway, the report came out right here at 10 o'clock, okay, and we had the dipsy doodle before, so a lot of people are program trading using straddles and strangles a lot of times in the options market to play these games, but you can see it didn't have a lot of effect. So just be aware that around report times, always be cautious. I prefer to be out of the market because I can't tell where it's going. And you get these big dipsy doodles all designed to take out all the stops both ways, and especially trailing stops when it comes back. So be cautious around this time. Well, I hope that helps. There's not a lot you can do when these guys play those games. So I will talk to you later.